Hello, I'm Ataman Özyıldırım, Director for Business Cycles and Growth Research at the Conference Board, and this is your Economics Watch brief for emerging markets for the month of June. Are emerging markets losing their growth momentum in 2018? Overall, it seems so. The Aggregated Leading Economic Index, or LEI for emerging markets at the Conference Board, suggests that the growth momentum is moderating. But the picture is a mixed one. For example, growth in the LEI for Brazil declined in April, while it picked up moderately in India after a significant drop in March. The recovery in Brazil, which is emerging from a two-year recession, might be losing steam. The continuing increase in unemployment in Brazil will challenge its consumer-driven growth. But even the pickup in India's LEI growth is unlikely to support a growth revival, as rising oil prices will continue to challenge India's inflation outlook and macroeconomic prudence. While the Purchasing Managers' Indexes for manufacturing remain in expansionary territory for the emerging market economies, they declined in almost every country in the recent months, pointing to a weakening expectations in the manufacturing sector for the remaining of 2018. Domestic consumption remains a major driver of emerging market growth, but even that has slowed recently. The contribution of net exports has been moderately negative, except in China. There has been some uptick in the contribution of investment, but investor confidence remains subdued in both India and Brazil, pointing to a potential moderation. Moreover, investment continues to shrink in Mexico. Inflation remains a challenge for the economic outlook, especially in India and Mexico, as rising oil prices could drive up inflation. In addition, a stronger US dollar will make imports and dollar-denominated debt servicing more expensive. Since the Asian financial crisis in the late 1990s, many emerging markets have reached extremely high levels of debt, both corporate and government debts. This may cause misallocation of resources from productive investment to interest payments. Overall, GDP growth in the emerging economies in 2018 is likely to remain the same as last year at 3.9%. Declines in the growth rates of Turkey, China, and East Asian economies, and growth moderation in Indonesia and Mexico all add to additional risk to a moderate outlook for emerging markets. I'm Ataman Özyıldırım, and this was your Economics Watch brief for emerging markets.